Joining me now to discuss this is Carlos de Alba, analyst at Morgan Stanley. A lot of materials companies, raw materials companies in your coverage universe. Carlos, let's talk through why the materials sector is not getting as much attention for its outperformance. It's an even bigger sector than energy, but energy gets all the spotlight these days.
Yeah, hi, Dominic. Thank you for having me. Well, I think people have been away from the space for over a decade, and there is a lot of people in the market that are not familiar with the space. They're not familiar with the stories, and they are catching up as the stocks go up. So it might take some time, but what I see from my conversations with investors is that they are doing the work. They are feeling the pain of not having exposure to the names, but they are really interested and looking into it.
You know, whenever I see commodity headlines like I've seen now, I think back, maybe about a decade or so ago, we talked about things like commodities, supercycles. We talked about things like oil at $200 a barrel, that sort of thing. It doesn't feel as though it's getting as much attention these days. Is there a commodities supercycle in play possibly in the coming years?
Possibly. I mean, it's different definitely than what we saw in 2000, running into 2008 and then 2011 that was driven by China. This time around is probably going to be driven by the electrification of the world. The world needs to be greener, and that requires materials. It requires copper, it requires nickel, aluminum, silver, and steel. So that is what is going to be behind a super cycle this time around more than a specific country.
So is it going to be driven this time around? It's not your forte, I know, but the last time we talked about oil quite a bit. This time it's very, very much more geared towards things like steel prices, iron ore prices, copper prices, those types of materials. Is there a way that investors can still benefit? Is there still upside left to go? And if so, where is the most compelling outperformance forecast to be?
Sure. I do think that investors can still benefit from what the stocks in the space have to offer, particularly when you looked at the last decade or so. The material space, the steel in particular, the S&P 500 steel sector relative to the broader S&P 500 has underperformed for more than a decade now. We are just barely at the same level that we were in 2000 before the prior super cycle. So I think as steel prices remain higher than people expect, and we now see whole rolled coil prices, which is sort of the benchmark commodity grade for steel, staying above $1,000 throughout the fourth quarter. As people catch up to this idea and bake that into their numbers, they will realize that there is much more upside to estimates and cash flow that the companies can generate, and therefore the shares will continue to run, in our opinion. We like US Steel as we upgraded today. We think that this is a transformational story in the space. They acquire an electric arc furnace in 2019, and then they completed the acquisition 100% late last year, and they are ramping up this new venture, and it's going to benefit their earnings power in a very good way, and it also is going to make them greener than they have ever been. So I think it's a transformational story that will benefit with higher steel prices. It's going to help delever their balance sheet, make it stronger than we thought and what the market, I think, is expecting post this acquisition.
Carlos, there's been I guess a prevailing thought right now that the prospect of perhaps trillions of dollars worth of infrastructure spending here in the United States at some point down the line could be a tailwind for some of these raw materials types companies as well. As an analyst, how much do you kind of factor in the odds and probabilities around a massive undertaking around infrastructure here in the United States?
It's certainly a very bright spot for steel companies. Those that are in the U.S., based in the U.S. Now we need to see what the form and shape of those infrastructure projects that will be supported by the stimulus plan will be, because that will determine what type of specifically steel products, and therefore we are better able to define what companies will benefit the most. But broadly speaking, steel is steel, and higher capacity utilization for steel companies in the United States has typically been associated with higher prices and better profitability for the names.
Shepard Smith here. Thanks for watching CNBC on YouTube.